Hello and welcome, it's Jonathan. Okay, so another Saturday, another video. Now, Bitcoin, where are we? Well, we came right up to our sweet spot, just shy of it. You know, last time that we were creating videos, we were looking for potential highs around this area right here. And as you can see, we came just shy of it, leaving us some possible room to move higher just a little bit further into our first range here between that 29,000 and that 30,100 mark, okay? So as you can see, the market definitely is in a bull run. We have, I believe, you know, a lot of people are going to call the bull run. They're going to say they called the bull run from back here, and yeah, congratulations. I just used Gann's theories, and we were following the 12 weeks in the direction of the trend to confirm the bull run. Again, that doesn't say that the market can't turn into a bear market again. 12 weeks or more below in the direction of trend downwards would confirm the bull run is over and confirm a bear run has begun. But you know, these are the two areas that we're watching now to see if the market is going to come down and sort of rebound off it, or if the market's going to smash through both of these. But according to Gann, the market is in a bullish phase, and that should see prices over the long term. Over the long term, meaning the next 4 years, move higher. And the reason for that has got to do, in my opinion, first of all, you got the 4-year Bitcoin cycle, which moves into the halving, and then the extended phase where the market just goes kaput and goes rocketing higher. And the second reason for that is we're moving into a period of, you know, I wouldn't say wild speculation. I'm actually going to say mass speculation, where the world is going to go feverish and they're going to be buying everything, and that's got to do with the 18.6 year real estate cycle, or the 18.6 year cycle. Now, a word from our sponsor before we head off. So before we keep going and talking about Bitcoin, a quick word from our sponsor, and that sponsor is me. So if you're not part of our forecasting service, you do have to get in there, because that is where everything's going to be, you know, highlighting. I did create an 8-part mini series which actually goes through several of these theories that I do talk about. So we have an 8-part mini series. I got a weather forecasting service, and I tie that weather forecasting service directly into the stock market, so you can see exactly how we do this. And we go back over historical forecasts from W.D. Gann, the human body, and how Gann was talking about cycles or natural harmonics, so to speak. I give you a full how could I say this? A full roadmap into the peak. You know, this peak goes into 2026, 2027 time period. And then I give you out to around 2032, where you can see what happens after the peak and where markets are likely to go. And then we talk about our monthly solar dates and turn dates. Okay, so that is an extended service on top of everything we already offer. It isn't an extra fee. You can buy that as a solo service, or you can get it part of our, you know, forecasting services. I've gone out and started to build that 2024 forecast, because I'm trying to get these out super early for you now, so that you can see how everything's moving in time. Now, I'm not going to scroll down on this because it's going to go into a lot of detail on what we're looking for, but I'm going to be showing you how the 18.6 year market, or cycle I should say, operates in the market, what we're looking for, how we time it, and how we can know that this is going to repeat with great accuracy. Now, I'm only about halfway through this, so you can see that if we just keep going down, there's a lot of text there, a lot of data to go through, and I really want you to get your hands on this. So I'm going to leave the link in the description below for you to actually join us. Not cheap. Again, I've been doing this for over 10, moving into 11 and 12 years now. So I'm giving you the keys to the kingdom in the way that we forecast, especially with this 8-part mini series. That is, this part here is what I took about 5 or 6 years to learn how to do. And I built, 20-minute videos just detailing exactly everything. I give you the formulas, the Excel sheets that I use, and also the software that I use to go ahead and build our roadmaps, build our forecasts. It's there for you. Now, just a word on that. Every single year, or I should say every time I move this from 8 to 9 or even 10-part mini series, and I extend on it, I'm going to be raising the price by an extra 50%. So at the moment, I think it's now $4.99 or something like that. So you can go ahead and just buy it for $4.99. The final price is $2,979. That's where I'm ending it at. So you can go ahead and get this right now, plus all lifetime updates to that service for just $4.99 or something like that. I can't even remember. It's probably even cheaper than that because I do stupid stuff like that. But it will be raising to the full price as I keep adding more stuff to it and as I keep making it better, more equipped and heavier for you. Now don't forget, you can do this with everything. So what I teach you in this 8-part mini-series can be applied to forex, can be applied to stocks, can be applied to cryptocurrency. And as you can see, exactly what we do in a Bitcoin, we do for the Dow Jones, we do for the gold market, we do for everything else. And all we're doing is just following the same process that W.D. Gann taught us. So thanks for listening to this word from the sponsor, and back to it. All right, so, well, here we are. The market's moved into the first congestion area, level of resistance, whatever you want to call it. If we go back, let me just get this. I don't like to squeeze my charts too much, but I want us to show you this whole period here. If we go back to this period, we can see that the market has come into this area again. And there is, from here, a likely chance that the market will sort of move down before it moves up. So if the market does decline from here, if it does find some reason to decline, perfectly okay. What we want to be seeing though is we want to see the market sort of vibrate between these and find higher lows and higher highs. The most important thing is that we don't get a break below this low here, and if we do, it's just a quick sweep. And definitely if we get a break below here, I'd be definitely concerned that potentially something else is happening that I haven't picked up yet, and hopefully by that time, you know, we're clued into it and we know what's going on. But I think it's fair to say, that as we keep going through the year, the likelihood of this market moving down to that $12,000 mark, which a lot of people were still looking for, you know, the longer we go up, the less time we have to move down. And that's primarily because, press the wrong buttons, that's primarily because, you know, these cycles, they just continue to repeat over and over again. So if we move back and we take a look at what happened 4 years ago, we get this, you know, crumbling of the market. We had this low here. I'll just go ahead and highlight it for you because I like to do that sort of stuff. We had this low here, it was taken out. The market did fall down into its lowest period before moving up again. Came back into that period over here, found some congestion before breaking above it. And if we go forward in time, what we'll see here is that the only time that the market broke that level was through the coronavirus crash, which happened into the lows in March. And again, I show you the exact method that I used to forecast that low in March for all the markets, the exact method. And it's the exact method we were looking for, if we zoom in, to pinpoint these lows in here, the exact method, okay? So, where to next? Well, let's go ahead and take a look at some other things. I want to first take a look at the Kagi chart. Kagi chart has posted green for Bitcoin on a weekly basis. As we can see, the Kagi chart is a perfect example of, you know, market movements in this method, and we use the 3% Kagi chart for this, and we can see that generally speaking, once it posts green, it does rally for a little longer. Once it posts red, you can see the market decline. So you would have gotten out near the top here, in near the bottom, in and out. So a bit of a swish swash here, out around the $38,000 mark, if you had gotten in again. And obviously back in around the $17,000 mark, and it's posted another bullish around the $24,000 mark. So the Kagi chart, in my opinion, is the perfect chart to gauge sentiment. I believe that it's definitely a market that isn't watched too, sorry, I should say a chart style that isn't watched too much. If we look at the Gann swings, this is a 1 week, 1 bar Gann swing. Again, Gann theory is very similar to Dow theory. You know, we're looking for those higher highs, higher lows. We've got this lower low here, but it was broken by a higher high, so we still have this higher high, higher low sequence. And the market is, if we take a look at it, trying to break that again, giving us another higher high. So according to everything right now, we've had no reason for the market to post a downward move, and instead we're looking for that market to keep boosting higher. Now, how do we know if it's going to be moving down? Well, we get this high, low, low, high, high, low. And you can see that this high here is definitely lower than that high, and then the market breaks lower, causing us to move down. We did get a low high, higher high, sorry, a higher low, higher high sequence form for crumbling. So we do have to take this with a grain of salt. Just like our 12 weeks in the direction of the trend, you know, things can change quickly. But generally speaking, if you do the back test and you take a look at the, you know, the amount of times that this has happened, you'll see that, you know, 70 to 80% of the time, the rules will be applied as you would expect. Nothing there. I mean, we're posting higher highs. still. If we look at this, we were looking to make sure that we didn't get a break below this. And on our daily, the chart's gone all funny there. No patterns that we've drawn up. Elliott wave, haven't drawn into any new Elliott waves here. Obviously, if we just do our basic Elliott wave, let me go ahead and get this in. So, price retracement on an Elliott wave would suggest the market is likely to move into this 38.2 to 61.8% level. So if we were to use that, what we'd be doing is marking our first wave up like this. And then if we would, this is obviously a longer term wave, because you could have a little term wave in here, you know, 1, 2, 3, 4, 5, and then one wave down sort of thing. So let's go ahead and get this on here. We're in now wave 3. So we'd be looking for prices to extend. We're at the 100% level, but hopefully extend to that 35,000, 45,000 level. If we go back to this level here, 35 to 45. So it is lining up pretty close to this level here. And then this level here, we're sort of getting that clustering now with Elliott wave. So I think, yeah, I don't want to keep harping on. We're in a bull run. We want to be, I'm not going to give advice, but if you're bullish, of course, you'd want to be looking for areas to buy, and if you're bearish, you'd be looking for areas to sell. In this instance, we're looking for areas to buy, and generally speaking, you want to be buying when the market falls, and you want to be selling when the market rises. Now, conventional wisdom, especially Dow theory, would say that you should buy on the breakout, you should buy when the market's moving up. I've sort of changed my tune over the recent time periods, and I like to buy when the market's falling, with expectation of rising prices. I believe that yields a better return. Though you do have to suffer drawdown occasionally when the market goes against you. That's all I have for this video. I don't really have anything else to say. I do want to keep suggesting that if you're not part of our forecasting service and you do want to get an edge in the market, you just got to get into it. You got to buy it. You got to get in. You got to learn, because the stuff I'm telling you, the stuff I'm showing you, is exactly the way I analyze the markets. And instead of you having to come to everyone on YouTube and trying to figure out how to do it, or especially like having to rely on someone else, you can make your own decisions. And I can guarantee you there's probably only 4 groups in the world that do exactly what I do, especially the way I do it. You know, we're all some way interconnected or have had work together in the past. So the groups that you can learn this from is very small. But as I said, I'm giving it away, I'm giving it out there, I'm putting it out there. No longer behind closed doors. You now have access to it online in an online course, and it's now yours for the taking. I'll talk to you next week, because the market has done exactly what we're expecting it to do. Nothing crazy going on. So I'll talk to you next week, and yeah, we'll take it follow up from there.